Dear students and working accountants, welcome to my Expert Tally Page YouTube channel. My name is Babu from Hyderabad. Today, in this video, we are going to learn and we are going to discuss about the bill-wise entries, the balance options, because already we discussed the bill-wise entries, the first two options, new reference and against reference, we discussed. The other two options, on account, that is let's say advance and on account. These two we will discuss today. Before entering into the topic, a request to you. So many students are working accountants, entering the channel, watching the videos and going out without subscribing the channel. Please, everyone visiting my channel, subscribe to the channel and click the bell icon next to the subscribe button. If you click, you will get notification for all the videos which I upload in my channel. And also, share the video with, the channel with others also. And the very, very important thing is, please watch the video till the end without skipping. If you skip in the middle, you can understand the topic up to that point only, and the balance part you cannot understand. It will be like half knowledge. It is a waste. So watch the video till the end. And if the video is good, after watching fully, if the video is good, please like that video. If you like that YouTube channel, will recommend this video to many people so that many people will learn. See here, in the college, we attend a period or class for 1 hour or 45 minutes at least. Like that, we will attend the college for 3-4 hours, at least 3-4 periods. So we are spending a lot of time here to learn a very good knowledge which helps us to get a good job, that is, which helps our career. And in this class, can't spend maximum 1 hour, less than an hour for each video. So please watch till the end by spending so that you get a good knowledge. Okay, now we will enter into the topic. I am sharing the screen. See here, the bill-wise entries, the first reference, new reference, first option. Second option is against reference, a new bill, and the payment of the pending bill. That is payment to creditors or received from creditors. And this is new reference is new bill when you are selling, when you are purchasing. And the other two are advance and on account. First, we will take off advance. See here, when you are going to purchase goods, we will send order to the suppliers to supply the goods, and they will supply, and we will make the payment later. This is normally happens, but sometimes when they are giving order, we will pay some amount as advance so that he can supply quickly. So what he will do? He will take the receipt. We will pay the money not as advance. He will receive the money as advance, and when he is sending the goods to us, we will make the sales invoice. The sales invoice when they are making, he will adjust the advance also in the invoice, and will make the entry, and he will send the invoice to us. And when you receive the invoice, who will make the entry in our books in the purchase voucher? When they are making the entry in the purchase voucher, we have to make the adjustment for the advance also. So if you adjust the advance, and the balance amount will be the new reference. But the invoice will show the total invoice price. But in the account, if you see the creditor account, so the advance will show on the debit side, and when we purchase, that will show on the credit side of the party, and the balance will be the net amount, which is the new reference. Okay, like that. Similarly, when you are selling the goods, the customer, he will order to us, and he will send the goods, send the invoice, he will make the payment. Generally, sometimes the customer, when he is giving order for the goods, he will make some payment as advance. So we will receive the payment. When we are purchasing, we will make the payment. When we are selling, we are a seller, we will receive the amount as advance, and that advance will be recorded. And then when we are sending the goods to him, we will make the invoice and send to him. When we are making the invoice, we have to adjust the advance, and for the balance to adjust, and the balance will be the new reference, that is the net amount, the balance, net amount of balance. You see the customer account, this account will show the credit amount of the advance, it will show on the credit side, the sales will be shown on the debit side of the party, and the balance will be the new reference, net balance, that will be the balance in the account. So first of all, we will take up, see here, so I see by leaving all the other old parties, I created two new parties. That is, one is X and Co and Y and Co. X and Co is a debtor, Y and Co is a creditor. Both we will take up. First of all, we will make entry. That is one of the last entry we made. Last entry is 2nd July. Okay. Now we will make for July. Okay. In the month of July, we will take up 1st July. We will take up 1st July. 1st July we will take up. Okay. Now, when our going to purchase the goods, we will send order to the supplier, and we will send some advance we will pay. So we are making it just like payment entry. We will make it, but it is an advance that we have to mention. So we are making the payment F5. So F5, we are making the voucher. So F5, you are making the payment. For example, so we are making cash, payment of cash. So cash or check, in another example, take. So we are making payment to the creditor, Y and Co. Y and Co is the creditor. Y and Co, for example, we are making a payment of 50,000 rupees as advance. And here you see there is no, we are not making the payment against any pending bill. That is why it is showing on credit, and we have to take it as advance. So in this case, see the top one, have to take it as advance, and the payment voucher number it will take by this one, by default it will take. But what we have to do is, that is not the payment voucher number is not required, because it will be 13 making advance, another 14, this will be a different way. So different payments will be there. That is why here to mention this is advance. Okay, what you say? ADV, advance 1. Just to remember that. Advance to make adjustment later. Like that, advance 1. That is the reference number we have entered. That is the just like bill number. Okay. And on 2nd June, he sent the goods to us along with invoice. So we take on 2nd June, we have taken 2nd July, sorry. 2nd July. Now we are getting the goods and we have to make the entry purchases. So F9, go to purchases. So the purchases 2nd July. And here we have to enter the supplier name 802, for example, 802. And here, what is the name of the party? We are purchasing from Y and Co creditor. Y and Co accept. So this is given. He is in the same state. In the same state, purchasing. Okay, we will take up regular, not unregistered. We will take up regular because it is better they are purchasing from unregistered, there will be no tax. So even though there is a problem, we will take up some like registered only. We take up as registered person, regular, accept. Okay, we are making the purchases. So make the purchases. So for example, we are making some. We create a new one. So, item A. For example, item A, and here we will take up numbers. Previously, we are taking pieces order, and then specify here 111, 22, 33. Okay, and here specify the details here. Taxable, we take 18%. Okay, so item A we are purchasing. So we are purchasing item A, for example, 10 pieces, so 2,500. It will be 10 pieces, 20 pieces, 10,000 rupees each. 10,000 rupees each, 2 lakhs for example. Okay, 2 lakhs. And here, take the, after this, there's only one item. Now we will take a piece in the same state. We will take the CGST, HGST. So total amount will be 2,36,000. Okay, so this is the Now here it will make the bill-wise entries. Bill-wise entries adjustment. Take the bill-wise entries. It is a new bill now. It will show new reference. It is a new reference only. But before that, 236, 236. Before in this amount, you have to adjust advance. We should not go to advance. Advance only. Then just like new reference. When you are giving the advance or receiving the advance. Now that advance is to be adjusted against reference. Against the advance, you have to make the entry. That is the adjustment. Take that one. And here, the 802 is the invoice number that will be taken for the new reference. Part is, so they already be paid advance. Here it will show the total amount, but here advance you have to select and enter the advance amount here. See, 50,000 rupees advance we received, and the balance is payable. So it will show the balance will be the new reference. Go to that new reference and go to new reference is the bill of the, that is the invoice. So 802 is the supplier invoice. So 1,86,000 rupees is the balance we have to pay to him because already we paid advance. Okay, like this we have to make the adjustment, but adjustment the advance will not be shown here. So if we go to the party, the display more reports, account books, ledger. So if we go to Y and Co, so here we go to Y and C. We paid him, he received. So we made payment, he is the receiver. So cash account, that is, his account is debited with cash, 50,000 rupees. And when you purchasing goods, the purchases are credited to his account, 2,36,000. So the new reference, what is the new reference? 1,86,000. That will be the balance. So in this case, what happened? So 1,86,000 is the new reference. That is the amount outstanding. That is why 1,86,000 rupees is the amount outstanding. And later, when you are making the payment, you have to make the payment of 1,86,000 only. And here, when you are making the payment, against reference you will pay. That against reference, this is the bill. Against reference, it will not show 2,36,000. Against reference, so already adjusted and new reference is only 186 in this, isn't it? New reference is 1,86,000. That is why in the bill-wise entries, against reference, the bill outstanding pending bill will be only 1,86,000 only will be the pending bill. For example, 2nd July, after receiving the goods, we are making payment. For example, payment of total amount or some amount. So 2nd July, we are making the payment. As see here, for example, total is over here. 2nd July, making the payment, F5. Making the payment, whom we are paying? Y. We are making payment to, we are paying cash or state bank. We are paying by cash or bank. Here, paying to Y and Co. See, 1,86,000 rupees only is the balance. And here, for example, we are making payment of 1 lakh. So here, against reference. So how many reference it will show? Only 1,80,000. That is the only amount outstanding. That is why that is only the new reference. In this, we are making payment of 1 lakh. Now, still 86,000 rupees will be the balance. If you make the payment of total 1,86,000, if you make payment of 1,86,000, here I have to make the manually attended because it's already taken. In this case, the balance will be 0. Like that, this is we are making payment to check. That is why here check number. For example, what is the check number? Will be our check number. This is about the advance paid to the creditors, that is supplier. For example, now we are making another one is X and P is the debtor, that is our customer. Now, for example, again on 1st July only, 1st July only, we are making, the seller will, the customer is giving order to us and he is paying advance to us. That is, we are receiving the advance so that on 1st July, we have to take the advance as received. So, receipt we have to enter the receipt. For example, received by bank to bank check or cash order. We are receiving by from X is the data. From X we are receiving. For example, we are receiving 1 lakh rupees as advance. It will show on account because we are receiving. Against reference, there is no pending bill. So it is showing as advance. This is received as advance. So I have to go to take the advance. So advance and this is the receipt number is not required here. Advance 1, for example. Advance 1 we are receiving 1 lakh rupees. Okay. This is check that is really showing how you received. Check you received something, their number, and where their bank account, their bank here, State Bank, their bank also, State Bank of India. Okay, for example, this is that. So on 1st July, we received advance from our customer, and on 2nd July, we are supplying to him goods. So we are selling. That is FA. To whom we are saying? To accept we are selling and accept, and he is a regular person. Okay, whatever. In the case of sales, to anybody, we have to charge the tax. So we are making sales, and what is the amount? For example, we are taking item B. For example, item B, it is also numbers, and then maybe letters are it maybe. And here specify this one 33211 we take in the reverse order. And here specify the details here, taxable. So whatever it may be 12%, whatever it may be, we take the percentage of the tax. That's all. And then we are receiving 50 items you are selling, 50 items, each one, because there is no purchase, so it is showing as item B is not purchased, negative. Here it is 3,000 rupees, for example. You will take up 1,50,000, and then is from the same state, that is by CGST, GST. Okay, CGST, GST, and now this is the new bill, but there is some adjustment. We received some advance, so here it is showing, because the new bill showing new reference, but we have to, first of all, adjust the advance. Adjustment will be against reference only. Advance when you received against reference if we take. So advance we received already 1 lakh is there. So type here 1 lakh. So that's it. And the next balance will be the new reference. New reference will be the 24. So 24 is the invoice number. No, advance. This is advance 1 lakh, and here new reference 24. So balance only 68,000 is there. The outstanding amount is all. Now if you go to X and Co account, if you go to DAL, X and Co, if you go to X and Co, see, we received through bank, we received 1 lakh advance, we received means is a giver. The account is stated, and the sales amount is invoices, because the invoice amount is to be shown, because it is to be disclosed to them. We have to pay the tax to the government, but disclose the total sales. So 1,68,000. So the balance new reference in this is, the new reference is the net amount payable. Reference of adjusting the advance, the net amount will be the balance 68,000. That will be only shown here. That will be only shown here. So when you are making balance amount, when you are receiving the balance amount, next when he is making the payment to us, and then against reference you will pay. Against reference is sales invoice 24. Against reference 24, the bill outstanding bill amount will be shown as 68,000 only, because 1 lakh is adjusted. New reference is 68,000. New reference is the pending bill. The new reference will be 68,000. Pending bill also will be 68,000. For example, again, after selling the goods, he sent the amount to us. So we are receiving the money. We are receiving the money. So this time we received cash. Cash from X and Co. X and Co. See, balance is 68,000. For example, he is making only 40,000 rupees. So against reference, 68 is the balance. So net amount will be the balance. New reference 24 invoice number 2nd July. So 40,000. So then balance will be 28,000. Okay, 68 minus 40. Again, when he is paying next time, that 28,000 will be shown against this bill. Till the bill is completely paid, it will show the against reference that the pending bill it will show. Okay, next time when I am paying, the pending bill will be invoice number 24 and 28,000 rupees is the balance. Like this. So like this, we will make the entry. This is about the advance, how to receive or pay advance, and how to adjust. Advance is adjusted when you are purchasing or when you are selling. Last one is on account. See, what is meant by on account is, so when you are making the entries, new reference is the new bill, advance is advance, adjusted after the sales or purchase, and against reference is the when you are making the payment or receiving the money against the old bills, the pending bills. But what about on account is, If there is no reference, means no pending bill, old bill, no pending bill is there. In such case, so we don't know the details of the pending bills. Only we know amount due is 1 lakh. Out of that, some amount is paid. For example, see here. For example, here we are receiving money. Cash we are receiving from someone. For example, A, B, C, ABC and Co. Okay, ABC company is a debtor. ABC company is making the payment. We are receiving the money means we are receiving the payment. Received. So here A, B, C company, ABC company. We are receiving means he is a debtor, that's why he is making payment to us. So sundry debtor we will take up and we will everything will make. Okay. And now we are receiving 50,000 rupees because his amount due is not current balance is not the thing is there. For example, his amount is due. I mean, his against new reference bills are not saved. That is why we don't know the bill wise that pending bills we don't know. We know the total amount. For example, 1 lakh is outstanding. He is paying 50,000. If you go here, there is no pending bill. That's it showing automatically. So if the pending bills are the new references are not available, pending bill details are not available. Only the total amount due is available. In such case, we cannot adjust against any bill. That is why we take it up as on account. Okay, this is the similarly when they are making payment also. Okay, that's it. This is about without if you don't know the pending bills details, then you have to take it as on account. And some case, and then next one is then the check bounce cases. So see, when you are making payment to the buyer, customer, making payment to the supplier by check. And when the check is bounced, don't give about that. We will take about the receipt from the debtor who will receive the money. So when you receive the money by check, we will make the entry, receipt entry. So when you are making the receipt entry, it's okay. And later, suppose we will deposit in the bank. If the check is bounced, then we are making entry. In that case, there will be no pending bill because when you sold the goods, for example, here, see, a data. So we sold the goods here, 2,36,000. We purchase this. No, I will take up for ABC, something. ABC. This is on account now. So now we will do something. Here, for example, here we received money, receipt, cash. Okay. See here, X and Co is a creditor. We paid cash. We made the payment, but whatever it may be, I will take up from here. So, for example, we received money. Example, we received money from again X and Co. We take X is a debtor. X is a debtor. So receipt. We received check from debtor X and Co. X and Co is the debtor. For example, we received his account is due amount is 28,000. For example, we received 28,000 from him. So against reference 28,000 as second year. We received that money through bank. So bank check we received and his number is not, and his bank was, for example, or maybe so space bar you click, select the bank name. It is, I think it is the Bank of India. I think Bank of India, whatever that is the bank. So we received the check for the balance. Balance is nil. Okay, here you see when we made the sales and there is a due reference, and when you are making the payment, he made only part payment. Still, the bill is pending. The account reference is 24 is the pending bill. Paid what amount and the balance is pending. That balance is also paid. So when he sold, new reference 24 invoice, new reference. When he made the payment against 24, he paid it twice. Second one, first one more, last balance he paid. So the balance in pending bill 24, new reference when we sold. The new reference 24 and made payment, that when 24 invoice, that is bill number, is closed. That is closed because we sold goods, he made the payment twice. Totally, the bill is closed. Okay. For example, so this one. See here, we received on 2nd July, we received 28,000, that is the balance. You see, data. From data, we received 28,000 rupees by check. For example, it may be online bank, what I mean, that bank is giving good service on the same date because you can take 3 or 4, but education will not take. So on the second disability, on the second, you see, on that day, this check is bounced. So in the case of check bounce cases, where you will make the entry, check is bounced, and here check is 654,856. I will take that. 1, 2, 3, 4, 5, 6. It's easy for us. So that is the check number. 0.24. Check date. 2nd July. 2nd July. Okay. So it is accepted. Okay, completed. Now on 2nd July, the check is bounced. So in the case of check bounce cases, we have to make the entry because generally we receive check, isn't it? Now when it is bounced, many people they will make entry in as payment. Received. Now they will make entry as payment. We are not making any payment. Receipt means receiving money. Now this bounce means we are not receiving payment, paying any money. The thing is, the check is bounced means our bank we deposit in our bank account is debited bank account, and that bank will collect the money from the other bank if they will get the money. Now check bounce means the check amount is not received by the bank. So the bank is debited when you deposited. Now it is not receiving the money. That's why that is to be cancelled. So bank account is to be credited, and his amount is paid. His balance is closed. But now since the check is bounced, again he will become a debtor. So that is why this is only purely we have to make the journal because it is not a payment, not a receipt, not purchase or sale. So journal means non-cash transactions, and also not if you are not you should not enter in any voucher. Then you have to go to journal, F7 journal. Now, so here take up this will take up journal. So in the journal on the same day, now the X and Co will become again debtor. So if you take X and Co, he will become a debtor. How much? 38,000 rupees. He will become a debtor again for that check amount. So his account is debited. Now it is showing there is no other. Say in his journal we are entering. So not against any reference or any bill. It is only due to the check bounce. So it will take us because there is no reference. There is no bill pending. That's why we cannot take any against reference or maybe. So we take up on account only. So on account you have to take up. And now credit, who is the creditor? So debit is bank. The party will become a debtor, and bank is debited when you deposited. Now they have not received money. The bank account is to be credited. State bank account is credited, and here the same check number 1, 2, 3, 4, 5, 6. We will enter. Okay, thank you. So like this, you'll get. So then you go to the place, his account, EAL, X and Co. So here, see here, 1 lakh advance, 168 sales, then 40,000 we paid, still 28 balance. That 28,000 we paid by check. That's 28,000. That's 28, not 10, 28,000. So 28,000 is the balance. We made the payment of 28,000. 28,000 amount is paid. I mean, check bounce. Now, 28 is check bounce. This is the deposited back. It is bounced now. So his account is credited when he paid the check to buy check. And now he is becoming debtor. Again, his account is debited. And he is a debtor, and the balance shows 28,000. Next time, here, we are making the payment. When he is making the payment, for example, again, the same day, when the check is bounced, we inform him he is making the payment. We are receiving the money. Received on the same day. So he is paying cash or whatever check money. X and Co. So what is the balance? 28,000. So he is making the payment of 28,000 here. And in this case, again, so there is no new reference or against, there is no bill. The bill is closed. And when the check is bounced, you taken as an account, the same on account you have to take on account 20. Like this, you make the this one. This is the last one on account. And sometimes in the customer account, that is our debtor account or our creditor account, we have to make some adjustments, increasing or decreasing. For that increasing discount, that is to reduce his account towards discount, or we will increase account towards interest. In those cases, for the interest, for the discount, we are again not against, no against bills. So in those cases, we will take them as, because we are not changing anything, we are charging interest. Or we will debit his account. We are giving discount, we will create his account, we will reduce. So for those, when we are making the entry, we will make as no reference will not be there. So we will take it as on account. That is, first one is we don't know the details of the outstanding bills. Second one is check bounce cases. The third one is when we are making any changes, increase or decrease in the customer account due to interest, discount, or anything for any other reason, except say returns. Returns means they will not take out. Like that, we will use this one. This is about the bill-wise details or mail-wise details or bill-wise entry or maintain balance bill-wise. So that is the thing we are under. So we'll stop to close this one. The next video, we will take up a very easy, very simple topic we will take up, but it is very, very important. Very, very, very important. Because even some senior most accountants also, they commit mistake in this aspect, in this item, they will commit mistake that should not be done. It should be very clear. Okay, that we will take up, that is called as we call it as rounding off. So this amounts, if there is any paisa, that paisa can be rounded off to the rest. That we will learn, that we will take up in the next class. So wish you all the best and see the video again if you want, again and again, and we can make practice that we can really do. So all the best. Thank you. Bye. Good night.